Welcome to Bears in Exile. Today is September 28th, and this is our update to CNO. Okay, it's been a little while since we made our last video. I haven't been following CNO really close because I'm not playing it right now. But away we go. So we mentioned in the past videos that we were looking for 528, which was the current floor, and that we would be going below that and actually going into the floors ultimately. I think that was back here, and maybe it was back here. Anyways, it was somewhere back here. And then right after that video, it had a spike, had to move up. Looked really nice and powerful and all that, and in a few days the Dow had really nasty days, and CNO just held its ground, just did not budge, and so that was absolutely fantastic. I enjoy CNO, it's a great company, but I still think that it has problems coming. The earlier warnings are still completely valid, and I'm going to show you why. Well, here was today's candle. Big ugly red candle, got below the lower Bollinger Band, which atypically you're going to want to bounce back inside of it, either with a side tick, a slight uptick, etc. Yes, it can push it down, but the odds are greater that it will have a side tick to an uptick the following day. If we have a nasty day in the Dow tomorrow, hey, maybe it will. Tomorrow will be the day where it does break 528. But what do the indicators say? Well, short-term moving averages are still pointing down. Throughout this whole little exercise that we've been having, for the most part, they've been pointing down, and today's no exception. You'll notice that it closed below the lower price consensus level today. Very, very bad sign. I mean, we had that happen on this day with the spinning top, and every other day it has kissed it and backed away from it, or gotten below it and been able to get back through it. Now, what is the lower price consensus level? I'll show you. This is where all of the major buying occurs. You have the lower, the major, and the upper. And so we are definitely below the major, we're definitely below the lower, and there isn't anything to catch it down here. We'll have to go back in time a long ways, and these probably are not entirely valid anymore, so we're not going to look at them. But going back to standard analysis, as the short-term moving averages, we have the middle Bollinger Band line above the short-term moving averages, and when that happens, it acts as weight, pushing it down. Notice we have a downtick on CCI, downtick on both of our stochastics, the slow and the fast. We have a downtick on the all-important 14-day RSI moving average. This one is slow, but you should always listen to it. It doesn't lie very often. And downtick on the RSI, downtick on the MACD, downtick on the histogram. You'll notice that the MACD and the histogram are essentially at zero, meaning they have all the negative area to move into should it turn into a breakdown. I don't want to scare anyone out of their mind with this, because CNO is a good company. It will bounce back in time. Here is our black box number one. We can see that it is bouncing around inside the minor trend, which it's supposed to do. And when it leaves it, it will go and test the major trend or the extreme trend. We can see that the extreme trend is sloping down into the minor, giving it a push in the negative direction. We just completed a kiss of the upper minor trend and are going in for a test of the lower trend. Notice that there's correlation between the lower trend line and our previous low. So when it hits that, there should be a reaction, and it will either go back to the top of it, or we're going to have a breakdown, in which case it'll be going down to the 460 area or the 440 area. And of course that is going to be very dependent upon the overall market, but considering that the Dow is above 11K and going back into the tens, you would hope that it would be higher and have some sort of a buffer to not break the previous floor. So assuming that we're going to lose a few hundred points, several hundred points on the Dow, that's not a good sign for CNO. And certainly the secondaries and the primary indicators are not looking good. Going to the 60-minute time frame. Actually, you know what? I'm going to do them all, because there's some really good people invested in CNO, and I don't want them to get hurt. At the very least, they should know what is going on. 180 time frame, the second most important time frame. Closing in on the previous low, yes. Downtick on CCI, downtick on the 14-day RSI moving average, still has room to move. Stochastics getting to the oversold area, RSI ticking down. MACD clicking down, histogram clicking down. 60-minute time frame, RSI clicking down. 14-day RSI moving average getting the turn, not a good sign. Stochastics fortunately are already in oversold area. They could produce a minor pop as they get out of it to meet up with the 14-day RSI moving average, and then presumably march down with it, creating a strong move to the downside. RSI itself getting into oversold territory. Histogram and MACD still sloping down. 60-minute time frame, very important time frame. 30 minutes. CCI clicking down. 14-day RSI moving average, very important. Still has room to move to the downside. Both stochastics hanging out at oversold. RSI very low. MACD histogram actually starting to slope back up, but it got another downtick at the end of the day. MACD itself still pointing down, not a good sign. And 15-minute, last one. CCI clicking down, room to move. Now here is the one ray of sunshine. 14-day RSI moving average clicking up, getting outside of the sold area. If it's able to march all the way to the top, there should be some sort of a limited pop of some sort. Both stochastics also low. If they march up with the 14-day RSI moving average, that will be good. 15-minute time period, though, keep in mind, is not going to have a $3 move off this thing marching to the top. So maybe 20 cents, maybe 30 cents, something around that measure, I would imagine. We don't have a climb from the bottom to the top recently, but we do have a drop from the top to the bottom, and that took us from 585 roundabout to 550, 30 cents. Yeah, that sounds about right. 20 to 30 cents if we get a march all the way to the top in concert. RSI already in oversold area. MACD histogram getting a downtick at the end of the day, but it has plenty of room to move to the upside, and which correlates with the stochastic and the RSI moving average. One other thing that we use for correlation is Stock Consultant's website. I will bring up the free version, not the paid version, it wouldn't be right, but and take a look at what it says. Well, it says that it is more bullish than it is bearish currently. The other parts are locked out, but they would say that it is more positive than negative for the trade quality. However, and it does not have a breakout alert currently, but yeah, it says that it is oversold, extreme pullback, excessive down, which is nice. However, the important parts: it is not at resistance or support currently, and the first resistance is 565. What does that correlate on our chart? Is that right? 565? Yes, it was, and it's a double 10, and then at 602. So 565 right about here. That doesn't really correlate with anything that I'm showing. It's in the area of this previous lows, but really I don't think that there's much of anything there personally, but evidently they're picking up something that I am not. But so they're saying that first resistance 565 and then 6. 6 doesn't really correlate with too much of anything either, in my opinion, except for this previous little peak that showed up a couple of times. But I guess they're picking up something that I am not. Continuing on. Support below, none. Yeah, that jives with what I see. There is no support below. We've burned it all. So if it gets through 528 and we still have room to move at that point, then yes, it is in trouble, in which case we'll be inside of this area. And if it does look really ugly, we should be looking for a bottom of some sort around 460 and 440 currently. So there you are. I don't mean to be the bearer of bad news. Certainly we could have a positive reaction tomorrow with some kind of Euroland news. We bounce off of the bottom of the minor trend and go up to test the upper trend up here at 590, and some massively, the world is healed and Obama has saved the day. We do have the major trend up here at 660, so I don't want to be just some Scrooge or party pooper or whatever. There are potentials to the upside, of course, but certainly from the way that the chart looks, from the way the indicators look, it is not happy. And if we are breaking down into Dow 10Ks of some sort, 10, 700, 300, 900, whatever it is, we should be going into this area. So be ready for it, be planning for it, have a plan, and of course protect yourself. All moves are good moves so long as you're on the right side of the trade, and that's it. Good luck to all the good CNOers. I'll be with you in spirit, if not in voice. So there you have it. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.